guiding a little bit higher then in terms of your guidance this morning, raising your full-year organic sales growth guidance. What gives you that confidence, given the cost pressures that we understand?
Well, we've been exceedingly pleased with the company's performance in the first half, easily beating consensus estimates. We posted 7.8% organic growth in the first quarter, 8.6% in the second quarter. So very strong performance. And we also feel now that we have what it takes from a portfolio perspective to deliver mid-single-digit growth on a more consistent, continuous basis. So obviously in this year, quarterly performance is very much defined by COVID. But even outside of the COVID impacts, we believe that going forward, we can deliver consistent mid-single-digit performance. For this year, based on the strong first half, we believe that we can even guide to the upper half of that, and that is 5 to 6%, which we can comfortably commit to.
Good morning, Mark. I want to ask specifically about one of those sets of cost price pressures, and that's coffee prices. We've all seen the headlines on Arabica price futures that are up 25% in July already, and they're on a 4-year high coming into the month. You told our colleague that it's much easier to hike prices on coffee. So how much of those price gains are going to go into our consumers' morning brew?
Yeah, look, short term, like most coffee suppliers, we're hedged. And so there's some forward cover here for the rest of this year and part of next year. But obviously, at some point, you run through that hedging position, and then you do face those higher prices. But unlike transportation cost or packaging cost, where there's no hedging, at least it doesn't hit your P&L right away. You got some ample heads-up time, and hence you can be more gradual in your pricing actions. And so we'll watch where the spot price keeps going and then take pricing where needed. But obviously, we'll be very responsible about that.
Can I ask you about the pressure that you're under as a business, Mark, to make sure that product is healthy or becomes, over time, healthier? You recently talked about, or last month, you were talking about updating your nutrition and health strategy after facing some criticism on that front. Can you tell us a little bit more about what that will involve? Will it be the usual gradual reductions of sugar, salt, fat and the like, or is it something different?
Yeah, look, Nestle is one of the pioneers when it comes to developing a healthier food and beverage portfolio. So this is work that was started by my predecessors more than 20 years ago. And over the years, we've been one of the leaders when it comes to reducing sugar, salt, and saturated fats. And all of that work, of course, will continue. But in addition to that, there's also a few new dimensions on which we can improve over time. Think about the rise of plant-based foods, for example. And so we will update our food strategy, nutritional strategy, to be sure that we incorporate some of the latest technologies and developments and be sure that we have something that continues to be cutting edge. We started cutting edge in the late 90s. On this journey, we'll stay cutting edge going forward.
Mark, given your track record in M&A, can we expect more or even bigger acquisitions in the last 5 months of this year? And in which categories do you still see kind of room for growth through acquisitions? And aren't these acquisitions getting riskier given the kind of valuations we're seeing stretched in the market?
Look, one of the hallmarks of our acquisition activity is to stay prudent, especially when it comes to price. Overpaying is the start of acquisition underperformance. So this is something that we've always taken to heart. And so you can count on us being very selective and good stewards of our shareholders' money. It's important that, of course, even though the portfolio now is geared towards mid-single-digit performance, our portfolio adjustments and the focus on continued profitable growth will not stop. So across the full spectrum of our activities, we will be open towards bolstering our position and expanding the business, even when we see good opportunities. I think that's something we've always done and will continue to do.
So that's the M&A story. Mark, can I ask you about the move towards net zero? You, like many other businesses, have targets around net zero, and you're increasingly looking at all of your supply chain. What is the biggest challenge there? Where do you meet the biggest resistance when it comes to the supply chain?
Yeah, so this is one of our key environmental planks and something that we'll work on with a lot of effort. We were one of the first people that gave a precise roadmap on how to get there. A key feature is to dent the curve right in the 2020s, so not just to look towards the back end of the plan, but to really go for meaningful reductions over the next decade. So our plan, even accounting for all the growth of the company, which will continue, we plan to cut our greenhouse gas emissions by 20% by the year 2025 and 50% by the year 2030. At this point, it's no longer just a plan, it's reality. We have left peak carbon behind us. Peak carbon was around 2019. We are already going down, and even though we keep growing, as you see from the first half numbers, we don't intend to point up again. So we will continue to go down. It's a big challenge for food and beverage companies because the vast majority of our greenhouse gas emissions is in the supply chain. Only 5% of the greenhouse gas emissions is inside our own four walls in our factories and distribution centers. And of course, those are the easy pickings that you go for first. But then in the supply chains, you have to work on new agricultural practices, including improved soil health, low-carbon dairy farming, just to give you a few examples. And you have to work with hundreds of thousands of farmers around the world to bring that change about.
It's great that you've passed peak carbon. Tying into that kind of ESG theme and sustainability, how will the post-pandemic world look at Nestle, both in terms of flexible office arrangements, in terms of your kind of office space use, and also in terms of compelling your employees to take vaccinations?
Yeah. So look, I think one lesson we all had to learn this year is that there will not be one post-pandemic world. I mean, around the world, this will take different shapes. It's going to be a gradual recovery. It's going to be a non-linear recovery. And it's going to be very different in different parts of the world. We're present in 186 markets, so we have to adjust to local conditions, keep employee safety a top priority, and business continuity as we've done throughout this crisis. We are committed to what we call a hybrid model, where, of course, we want to offer people to work more remotely, even once the pandemic threat has gone down. But we're not committing to a fully remote work style because we believe a lot comes from co-location, working together, ideating together, brainstorming together. And it's also about preserving the cultural fabric of the company, which is very important to us. This is a huge company, and still it has retained over the decades a family feel, and we don't want to lose that.
And let me ask you something else, Mark. This isn't directly linked with the pandemic, but the pandemic has driven changes within society, maybe to go faster than they previously would have been expected to. So I'm thinking here about reduced consumption of dairy, perhaps, and moves away from meat consumption. I know that you've been moving into cultured meats. Give us your thoughts on how big that kind of sector can become, given the bigger rethinks that many people are doing post-pandemic.
Look, you're absolutely right. I think the pandemic has accelerated around the world the interest in healthier nutrition, and especially nutrition that boosts the immune system. One of our key themes is plant-based foods, and I think we continue to post strong double-digit growth rates in all aspects of our plant-based offerings. In addition to that, we just entered a research agreement with a cultured meat company because here again, in the spirit of leaving no corner uncovered, we want to be sure that that promising development, that we catch it early on, see its potential, and then we need to see where we can take it. For the moment, the part that's really ready for prime time is plant-based offerings across the full spectrum of our food category, and also when it comes to dairy.